This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, along with our co-host, Shelley Brown, and we've been selling homes here in Southern Nevada since 1988. Shelley and I are also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. And with Shelley and Bill and myself, we're adding John Ingram. And John is a native Las Vegan, 13-year survivor of the mortgage industry.
That's me, I tell you.
And that's great. Well, welcome back, John.
Thank you so much. Appreciate it.
Glad to have you back. You know, one of the questions we always get asked, Shelley and I get asked this all the time. What are the interest rates?
What's my
interest rate
going to be?
What's my interest rate going to be?
Sure.
And obviously we can't answer that question, but even you can't necessarily answer it until you walk through some stuff with us.
Yeah, you know, honestly, I want to. For me, I would like to share a little bit about kind of the core question itself. What is the interest rate? As if it was one specific answer.
Right.
It really is not one specific answer. And it's really one of the most important things I want to share today is that there is a menu of interest rates available.
Okay.
You know, you have for one particular loan and one particular person, they have options, let's just make up some numbers here, from 3% to 5% available. And you can choose anywhere you want on this spectrum.
And there's the dilemma, is that, you know, so if you say to me, you can have anything between 3 and 5, I want 3.
Right.
But now, what does 3 cost me?
Yes, that's
the question.
The next logic to use.
What do we call the cost? Points?
Well, yeah, I mean, it's typically referred to as points or the yield of that interest rate. And so there is a right, at least what I would consider a right logic to thinking about that stuff. And the idea is, how much do you need to spend to get your interest rate?
Right.
Does the interest rate change depending on the length of the mortgage as well?
It is impacted, yes. And you see, obviously, a significant impact between your 15-year mortgages and your 30-year mortgage. That's the most common sort of discrepancy.
One of the things we always hear is that, the Fed just raised the rate, so mortgage rates are going to go up. But that's not necessarily a direct correlation, right?
That is absolutely true. So the Fed adjusts what we call the federal funds rate, which is the cost of which banks loan money to each other effectively.
Okay. Right.
That only has an indirect impact on mortgage interest rates. It has like an implied impact. And the idea is it's about the competition for money. If a bank can loan out money for one day at a certain amount of profit, then money that wants to be loaned out for 30 years needs to compete with that price.
Okay.
So you get pressure to move mortgage interest rates higher when short-term interest rates go higher.
And also, how much you borrow, does that affect the interest rate if you borrow over 400 and...
Yes. I mean, you do trigger into different kinds of lending. So the idea there is, for the most part, we have a line in the sand out there, which is what we call the conforming loan limit.
Right.
The limit that was set down by Fannie Mae, Freddie Mac, as this is the maximum size loan we would accept for your market. Currently in Las Vegas, set at $417,000. So when you go above 417, you trigger into what we call the jumbo loan market, which doesn't have as wide a pool of investors or people able to buy those as an investment. And as such, those interest rates will differ from what we call the conforming market.
So basically, when a lender loans you money, then they're selling that loan to somebody, basically, is what you're saying.
Yes, and it's really one of the core functionalities of our marketplace. Right in the 95% of the marketplace, we have 3 go-to places to be able to sell a mortgage to an investor, and that's Fannie Mae, Freddie Mac, and what we call Ginnie Mae, which is the entity that purchases government-backed loans like VA and FHA. So we know that if we make a loan to that standard, we can sell that loan to that buyer, Ginnie Mae, Fannie Mae, Freddie Mac, and get that money back to loan to the next person. This is how we created a liquid housing market.
You've been listening to Las Vegas Real Estate Now with hosts Harvey Blankfeld and Shelley Brown. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.